But we are a blockchain platform that focuses on commercial real estate. We're looking to democratize real estate to make it accessible and affordable for citizens as well as on the institutional level. For the next 7 years, see $19 trillion of assets being tokenized, and roughly $3 trillion of that is real estate. President pushing for tokenization, even talking about tokenizing certain real estate projects. Once that hits, that opens up the whole United States into realizing tokenization of real estate is what the president is doing. I want to do as well. I like Stellar. I think they're focused on RWA and payments and speed of payments, micropayments is very good. Same with Hedera. I mean, we started with Hedera because they have the same focus. Now we've created a source where you can process on both chains seamlessly through RedSwan's and gives us a broader reach in digital ledger technology space.
Welcome back, ladies and gentlemen, to the All In Crypto podcast. I am your host, Rupert. And today I am delighted to be joined once again by Edward Enwakiti, who of course is the CEO of RedSwan. Ed, how are you?
Great, Rupa. How are you? Thanks for inviting me.
The pleasure is all mine. And this is the third time having you on the show, and it's for a reason. Tokenization is very clearly and apparently the path forward for markets, and RedSwan has been positioned to essentially capture that transformation. And that's what I want to sort of share with my audience. I think a great place for us to start is with a recap on what RedSwan is and why it is you're doing what it is you are.
Sure, yeah. But we are a blockchain platform that focuses on commercial real estate. And so we're looking to democratize real estate to make it accessible and affordable for both citizens, on retail level, as well as on the institutional level to buy in. Because with my 20-year experience in real estate, it was illiquid, it was inaccessible to most investors. I couldn't sell to my friends. I can only sell to people who can write $2 million checks. And it's time for a change. And I think that with thanks to blockchain technology, we're now able to bring this democratization to real estate to the average citizen around the world.
Yeah, again, this is why we absolutely love talking to you. And I think it's quite obvious why you're looking to go for the real estate market. You know, if we talk about the United States, for example, there's an estimated $280 trillion in the United States and further afield. Now, that is a market that really could benefit from tokenization for some of the reasons that you just mentioned there. What is your take on how much of this can and will be tokenized? I know you have previously thrown figures around in regards to in the next 5 years, we're looking at something like $14 trillion being tokenized in regards to real estate. Has that changed? Right. Is that still your sort of base case? You know, what kind of slice of this pie do you think is ready to be tokenized and going to be?
Well, I'm going to just let Boston Consulting Group, since they're the experts, speak to that, and they've put out there that over the next 7 years, that we'll see $19 trillion of assets being tokenized, and roughly $3 trillion of that is real estate. So not quite 16, but $3 trillion of real estate is still a very large number. And I think that we'll probably see real estate even emerge higher than the other food groups, just because it's the largest asset class. It's an asset class that people have been locked out of for a long period of time. And because of the fact that it was illiquid and the fact that it was just too expensive to get into. So I think you're going to see a lot of people pouring their money into real estate, high quality real estate around the world, because one, they now have the capability to do so. And two, they now have the affordability to make that work, more so than buying more, money market funds or treasuries. They can do that today. They could do that, yesterday. So that's nothing new, but that will be, you'll see more of these tokenized instruments. You'll see more tokenized stocks on the equity side. But I think the real estate side is something that people didn't have the opportunity to take part of. And now that they do, you're going to see more people jumping into it. It's just a matter of education right now, I believe.
And I think it's ripe. I really do. If we talk about, and I know you do a lot, the kind of wealth transfer that's taking place. It's the greatest wealth transfer ever. You talk about the baby boomers that have around about $150 $6 trillion, that getting passed down essentially to millennials. A lot of that wealth is actually in property, in real estate. How do
Yep.
you kind of envision that transition? And when we talk about millennials, these are kind of digital natives. These are people that perhaps and increasingly are investing directly in crypto. They understand the concepts. How do you see that kind of transition going, and where does tokenization fit into that?
I think that transition is moving right now. We're seeing for a lot of the new assignments when people are calling us to tokenize their assets. Typically, is the CEO of a fund or asset management company, but I'm seeing them bring their son or their daughter into the meeting because they feel that their son and daughter can understand it faster and be able to now give them, an update after the meeting of what's really going on. So I'm seeing a lot of that where the CEOs are bringing younger staff members into the call because they can relate to what we're saying much easier, and then they can have a down leg meeting to actually discuss the details later on. But that's telling me that they're so interested in doing this, and even though they don't understand a whole lot, they're bringing in people who have a better understanding of it to move forward so they can make a faster decision. Because typically, if people are not aware of something and therefore they don't understand the fundamentals, they stay away from it. They don't even want to try. But by them bringing in their resources, and on almost every contract we've signed, it was one of the younger players in the company that is driving this force, not the CEO.
And why are they doing that? Why do you think they're doing that? Do you think they recognize, what is it that's so, we are definitely going to talk about the kind of democratization of commercial real estate and real estate more broadly via utilizing distributed ledgers. But why do you think these kind of funds, asset managers, these sort of players within the real estate market are getting excited and going down this path? What are these younger people in the company saying to them? What's getting them excited?
Well, they are comfortable to know what they don't know and don't understand, and realize that something new is happening and taking place. They're reading all the headlines, so that all this peripheral information is in their head, but they don't understand. They can't understand how democratization of real estate would work. They can't understand how a person would be able to buy a block of real estate and be able to hold some of it, maybe 80%, and trade 20% on a monthly day like they do stocks. That is not something that most senior people in real estate can never fathom because it's never happened before. And so, to not miss out on a trend that you hear is moving forward, you want to bring somebody else that can give you some better education, explain it to you much better. And I think that's a positive step forward when I see that happening, because that tells me that they're engaged, they want to learn, they want to change, they're hearing what we're saying, but they're also going to run it by someone they trust within their organization to give them, what their thoughts are. But that always leads for us towards, a new assignment, because it tells me they're leaning in and they want to be a part of this new millennium.
It's Lumen millennium. Yeah, that's exactly it. As Paul Atkins would say, a new era for financial markets is upon us, and real estate certainly, I don't think is going to miss that. And we're very much going from a kind of pre-internet era with assets into an internet era, and it's very, very exciting, and a real credit to you and RedSwan for being positioned. It's rather interesting. The world is kind of waking up to what the likes of yourself has been saying for a hell of a long time, and it's really nice to have sort of been interviewing you at various intervals on that journey. And of course, there is major unlocks for markets. There's kind of two parts, or kind of how I like to split it is there's the kind of developed world side of things that already has very robust kind of real estate markets that, of course, can benefit from this innovation. But there's also a kind of further afield part. I know in Brazil, which you were a couple of weeks ago, they're doing a hell of a lot. But there's not just great unlocks for a lot of the Western world and more sort of developed nations. There's also a major unlock for developing nations in regards to them really utilizing tokenization to catch up, potentially in some cases leapfrog, because they don't have all those incumbencies in regards to legacy players standing in the way and saying, no, we're not ready for this yet. Could you maybe give us some thoughts on that, in regards to how the more developed world is leveraging this technology, and then also how the developing world can really use this to accelerate their economy?
Yeah, well, the developed world, such as the United States, UK, Europe,
Yep.
uh, they're leaning on the technology because they see the efficiency of the technology, right? Digital to digital is far more efficient than analog or digital to analog, right? When I sell real estate, traditionally, like Cushman Wakefield, the average transactional cost is somewhere between 5 and 9%. That means brokerage commissions. That means title company fees. That means legal fees. That means appraisal fees. All those fees are going into the acquisition of a property is up to as much as 7%. That's not even including the pursuit cost of flying in several times to check out the property, to tour the property, hiring a company to do all the due diligence on the property. All that is cost before you even talk about profit that you have to pay coming in. So they see that the efficiency of bypassing all that cost gives them a greater ability to have a higher profit, but also to not have to worry about paying your investors back, to allow them to buy into your asset, and you can focus on operating your property and building your AUM and letting those investors sell off on the secondary market. It's a godsend for developers, right? It just takes a huge weight off their back so they can really focus and grow. Because if you grow your AUM from 500 million to 5 billion, that means you're growing your cash flow as well at a higher level. And we have less equity in those assets, means you have more return on investment. So for the stabilized countries, they get it. And they're now starting to learn and now starting to move in. For the developing countries, first of all, like we were in Nigeria talking to the pension fund of the government from Nigeria. And over the past 3 years, they've lost almost 35% of value because of currency devaluation.
Yep.
And at that time, they weren't able to invest overseas into other country investment. They had to keep their investments within their country. And because of that, the dollar going down, their investments went down, and therefore the pension fund value went down. Now, all of a sudden, they can access dollar-denominated investments in the U.S. that are paying substantial returns. But the number one thing for them is they get to preserve their capital. Losing 35% of value is significantly bad. But if you're able to make even 2%, 3% profit and not lose your actual preserve your value, then that's really the objective. So you see they have different reasons for wanting to utilize tokenization. And I think that's one of the things we're trying to pour into is go after these developing countries that need capital. We were just on a call with Egypt today, who's trying to build a substantial hotel in the downtown market of Egypt. And the financial markets aren't as open to them as they are in the stabilized market. So the interest rates they might be looking at are usury rates. I mean, you're talking 15, 20%.
Wow.
How do you build something and make money when you're paying 15 to 20% interest? It's very difficult. You can't do your best job. You have to be always thinking about cutting costs. But now, if we can bring in other global investors who see that as a great brand, a great market, and a great product and great management, they can definitely get a much lower cost basis on their capital than if the traditional sources they were going to in the past. So that's another reason why we're seeing a lot of calls from Africa, from China, from Saudi Arabia, from all these developing countries. Saudi Arabia is not developing, but all these other countries that are smaller. Malaysia are looking for capital, and some of them are just trying to get themselves on the map because they're not even part of the SWIFT system. Some of them are just their currency is so far down that they're just trying to figure out a way to get in the system of M1 supply, and by buying stable coins and also using their CBC to turn that into a digital currency allows them to do this. So I think there's a whole change taking place, which is going to allow these countries to quickly step up and start meeting the demands of the rest of the world by being more inclusive as opposed to being left out.
It's amazing if you think about how kind of global the world is right now. I can hop on a plane and go anywhere. I can send a text message anywhere. But the kind of investment market has really been left in the dark, as it were, and now it's being brought into the light with this technology. I mean, it's truly huge. And if you look at all the benefits, you talk about developing nations and how they can almost leapfrog in some ways through getting access to capital. Also, perhaps investors can get access into those markets where they previously couldn't. They can now do that in a fractionalized manner. I mean, what is taking place here is colossal. And I know a lot of people look for kind of new market opportunities, do you think that, for example, there is major opportunity in regards to, and this isn't on an investment advisory basis at all, nothing we say or do, either of us, constitutes as that. But do you think there are major opportunities in regards to going further afield and investors being able to unlock some of these new ventures? How do you see that? Because it has to be kind of symbiotic for both the people providing the product and the ones investing in it. Do you see this as a major opportunity? And what's the kind of market cap of this? I mean, is there anything on that? It just seems like I'm lost in it,
Well, you're looking at it from the right perspective. I think that now like on our platform, U.S. investors have an opportunity to look over and see what's happening with real estate in GCC, in Qatar or Abu Dhabi or Dubai or in Nigeria or Kenya or Ghana. So they can see what real estate projects of equal value, of equal occupancy level, credibility of tenants are selling for, and what kind of yield they're generating compared to what they're looking at in the United States, and vice versa. Those investors in those other countries are now, they understand what's happening in their backyard, but they can now see what's going on in Singapore, what's going on in New York City, what's going on in the United States and Canada, and they can now make better, intelligent decisions because you might take a little bit more risk to invest in Kenya if they're paying you comfortably 22% cash on cash return, and it's been historically positive, and you're able to convert your capital back into dollar because they're actually collecting and paying in dollars. You're going to say, I might want to put a little bit of my money into that because the risk doesn't seem so strong. And I think the benefit outweighs that additional risk. So that's an example of how I think people are looking at the global markets. But that opportunity didn't exist before without having a platform that has tokenized assets in a global manner, right? And I think that way, some of the major asset managers in the United States are probably wondering, I've never looked at anything outside of Europe, the United States, and Canada before, but now I see something going on in Egypt, and that's a brand name I understand. That's a market. The revenues look better than what we're doing. I should probably buy a little bit of that just to learn their method of operations to see if I could improve what I'm doing here in the United States. So these are opportunities that never existed before that I'm so happy we can make present on our platform today.
Yeah, it's beautiful what's going on. And there's, like I say, a good deal is one where both people benefit. And I think there's major benefits that are coming from this, both for an investor and somebody offering a product or potentially seeking capital. And I think it's going to lead to generally a better world. And we've spoken about the kind of investment side of things, and we'll talk a little bit more about the market side of things around this. I want to talk perhaps about everyday individuals looking to invest. Now, we spoke there about an example where a pension fund had lost essentially money due to currency debasement. And I think there's a lot of people, crypto kind of came about really to challenge the fiat systems. There's almost been a 180 in regards to its enabling them, perhaps to more of a degree. You talk about dollarization of the world. I think one thing that's really interesting is how this can change real estate as an investment. If you think about somebody not wanting to get debased, we're talking about examples where they move into dollars. Why wouldn't they move into fractionalized shares of real estate? Because I think the real estate market has been concealed to people that don't have large pools of capital up until now. This is why what you're doing is, it truly is revolutionary. How do you think about that? There's many benefits to people looking to invest or looking to, reserve their capital, preserve their capital. How do you think about how the kind of tokenization of assets changes things and perhaps morphs real estate, maybe not morphs it, but makes it more accessible to everyday people that might want to benefit from real estate being a kind of a lifesaver in many cases? That's certainly what my dad always taught me. Real estate is that. It's always saved him. So,
I think it has. Real estate saved me. I mean, I look back at all the investments I've made, whether it's stocks, options, whatever. Real estate's the one that still exists today and still producing for me today, and has defied, the inflation, recessions, and is still there. But I think when I think about the entire overall position of this, I think about like dollar cost averaging. You know,
Yep.
people stayed away from real estate because it's too expensive. I mean, you can look up in the sky and see all these beautiful skylines of these properties, but you know yourself could not afford to buy. You're not going to be asked to come to the table for any of those properties. So the only thing you can probably see is the corner store, the duplex, things that are on a very low level of real estate. And those really are the real estate properties that don't make as much profit, have the largest amount of property problems because, you know, they're managed by, you know, individuals as opposed to institutions. And they're also kind of straining for having enough capital to keep up with the times. But the nice properties, all the new properties you're seeing that the heavy dollars being invested in, most people have no access to. But you start thinking about it today, you know, you can start dollar cost averaging, right? So no matter how small your salary is, if you can buy $50 worth of a real estate portfolio or $1,000 a month worth of a real estate portfolio that's paying you an average return of X, slowly but surely, that's going to continue to grow. You're going to see the real estate increase in value. You're going to see the income, the revenue increase in value, and you're going to see your net worth increasing in value. And if you do this consistently for 5 to 10, 15 years, you're going to be in a totally different position financially than you were when you started. And that is where I see a lot of excitement for this because, yeah, you're right. People are losing jobs right now.
Yep.
Technology is taking jobs. But if people use this technology and this new platform of blockchain to actually get into something like real estate, they can create a career for themselves by buying fractional shares of real estate and then trading it. I mean, you know, for every buyer, there's a seller, and for every seller, there's a buyer. So you bought, you know, your first 1,000 shares of a real estate property, and you know you're Reg S, so you're able to trade anytime you want. And you happen to see that you're trying to sell it, and you put it out there for 25 basis points more than you bought it for, just for maybe 10% of your shares, and somebody buys it. Wow, you just made a little profit. Now you go back and you see that somebody's trying to sell the same thing, and they're maybe a little bit distressed that day, and they're selling it for a little bit less, 10 basis points lower. You might buy that. So you just might be in the sweet spot where you're picking up and selling real estate and making a profit while still holding on to a bulk of your real estate that's generating an income. That becomes a business. That becomes a lifestyle that you can enjoy and wrap into your own lifestyle. And I think that's something that the elderly who are now almost retired can do, as well as the next gen can get involved in if they don't have a job, or even if they did have a job. This is a side business you can grow. So just like people who are trading on cryptocurrencies, trading on stocks and bonds and options, you're going to see them trading on real estate shares as well.
I think it's really interesting because this is the first time really that retail has been able to do this. You talk about DCAing. We always encourage people to DCA. It doesn't have to be in crypto. It can be in whatever asset you find favor with. The thing is, though, that hasn't been possible unless you're extremely rich and your DCAing is pretty heavy. It hasn't really been possible for people to do that in this manner. That now is the case. You can earn yield on it. I think we are in a sweet spot in regards to the kind of early nature of this. I want to talk about that. Where are we in regards to all of this stuff being enabled and kind of maturing? I know RedSwan are, leaps and bounds ahead of most people in regards to this, but where are we in regards to all of this?
I think we're in a period of transition. We're definitely moving everything towards digital tokenization. Everything is going to be tokenized. I do believe that.
Yep.
And we've already started with many different types of products, whether it be treasuries, money market funds, mutual funds, private credit, now real estate. But I think that there's still a lack of education as to how it's done, how secure it is, the whole process. And so with that lack of education, there's still hesitancy on, okay, shall I just dive in? What I do think is helping is that when institutions start to show that they're diving in, and when the government starts to show that it's supporting it, because for the past 7, 8 years, we've had the exact opposite. Government was naysaying it, saying it was bad, it was criminal, it was we had major CEOs of banks and institutions saying this is a criminal activity. And so when you put that out there, these are people that the masses trust. And when they hear this, they just write off, say, I don't want to be involved in that at all. I saw what happened with FTX. I mean, all of it's that blockchain is all in the same category. Well, I think that now that they're starting to hear the reverse of that from government, from major institutions, that they're actually diving in, that BlackRock is saying that they're going to tokenize everything that they own, it's now starting to say, I think I should pay more attention to this, both on the institutional side and on the retail side. And we're now starting to see people come to our platform and start tokenizing their assets, but also asking questions about how to buy and get involved. So I think we used to make a lot of phone calls begging people. Now we're receiving a lot of phone calls, handling people and getting them comfortable with either tokenizing their assets or looking at portfolios to invest in and kind of giving them advice on what to invest in, what makes sense based on their criteria. So it's a different world for us. I mean, we're busy, we're handling customers, we're onboarding properties. And my goal is to make sure that we put as many billions of dollars on the blockchain as possible to give a lot of variety to investors of all types, because we don't know who's going to buy what, but we know people like to buy what they like to buy. And the more you have tokenized and you have on the shelf as inventory, the more institutions can start picking and choosing what they want. Individuals can start picking and choosing what they want. And when the switch goes off and the mad rush comes in because everyone wants it now because they've seen too many crashes in the crypto market and they need some kind of stability, all of a sudden we have the volume, the pipes in order to handle the volume, and the inventory to satisfy the demand.
Yeah, and by the way, guys, we'll tell you where to go to check out RedSwan and everything that we're talking about at the end. But there is a link in the description. Go and give RedSwan a viewing. Check it out. Check out the platform. Check out what they're offering and some of the products that they've got on there. It truly is great what's taking place. Let's talk a little bit. I mean, there's so many questions that I've got to follow up. I'm trying to figure out which one I should tackle first, which I think is always a good thing when you've got many questions to ask. One place that I want to start before we get on to sort of where RedSwan is today and some of what you guys are offering, I also want to talk about the fund. There's lots of people out there that might not know what property to buy. Well, you guys have a solution for that in regards to, you can kind of invest in more of a fund style manner. What right now, or where do you see this going in regards to people? What are people going to be able to do with their tokenized assets? So do you see it? We spoke about trading. One thing with crypto is DeFi, the kind of mimicking of traditional finance. So, for example, people can use their tokenized cryptocurrencies perhaps as collateral to get loans against. Is this something you guys are thinking about right now? I'm sure, I know you at this point. I'm sure it's definitely something you've probably pondered. What's your thoughts on all of this and how people can further use those tokenized shares of real estate in DeFi, things like this?
Yeah, no, good question. And we've definitely been thinking about this and discussing this with DeFi institutions over the past, I would say 18 months. And we're pretty close to being able to launch something with these institutions. And the biggest problem was many of them don't understand real estate. And so they're worried about, how do I sell? How do I liquidate? I can lend on this and be a lender on it, right? And I can take a position on lending on it I'm comfortable with. But at the end of the day, if I need to let it go, to get rid of it, how do I do so? And how long is it going to take? That's the biggest question mark that most of these DeFi institutions have, because they don't understand real estate. So the solution that we're coming up with is to bring on market makers. So now, not just one, but 3 market makers, right? So that way the market maker will guarantee that they can take them out at a certain percentage of the asset value. And for an institution, that's good. So if an institution says, look, I'm going to lend you, 50% loan to value on this real estate, and therefore we're comfortable with that. And then if for some reason is out there and now they need to liquidate, and there's a market maker who says, hey, I'm happy to make sure that worst case scenario, at 45% loan to value, we can take you out, right? Or even at the 50% loan to value, we can take you out, which means we're taking you out at your cost basis, right? That's still 50% of the value of the asset. So they're picking it up now at a very good price. If they know real estate, that means that if this property is generating 10% yield, they're now picked up that property generating 20% yield. Well, going back and selling that property to a real estate investor who's very comfortable with 8 to 10% yield, and you're now telling them they can get 14% yield, they're going to get a sale, right? And so they'll feel comfortable that they can now be able to provide that money market maker position because they know the kind of assets they're taking a position on. And it's hard for those who are in the finance market for crypto to be able to understand that, because the crypto they see is it's a liquid all day long on an exchange. And so real estate has not been there, with the exception for REITs. But now that real estate is tokenized and liquid, they can put those shares back on the market and offer it for a better yield, and there'll be buyers to pick up assets at a better yield all day long.
I think the collateral question is a really interesting one, or topic. On Friday, we saw a cascade of liquidations take place in the cryptocurrency space due to price action. There was obviously escalation in regards to the US versus China and some of the tariff and trade wars that are going on. That lent on the traditional markets. Crypto, or certainly Bitcoin, is a beta of that. Altcoins are a beta of markets. And it caused some really horrific price action that caused a lot of people to get liquidated and a lot of capital to actually get taken by these DeFi platforms. And I just think that there are better forms. If you're going to do something like that has heightened risk, if you're actually going to borrow and leverage up, you need a more secure or less volatile asset, I think. And I think real estate, for many people, traditionally is that. Now we're kind of democratizing that to the more broad public. And I think there's so many things you could do now that you can tokenize things. It's just how to do it in a safe manner. That's important. And it's one thing I love about RedSwan is you're not trying to cut any corners, and you have never taken that approach. You've always gone the right route for this, when a lot of people have been saying, no, we don't want regulations. You guys have gone, look, this is what it is.
Right.
We want to use the technology, but not circumvent all the protection rails that are put in place.
Yeah. Absolutely. You have to be compliant with the SEC and the regulatory authorities, because that's the long game, right? The short game is to play games and to act like you're selling something that's not a security, make some short-term money. But trust me, the fines that you have to pay and the embarrassment you're going to have is not the long game. So yeah, we decided that we're going to play the long game. We got our license. We now have 5 active security broker dealers on our team, and we're now able to talk to institutions about activity because they know this is legitimate. So that's a good position to be in. It allows us to talk to the highest level institutions in the world and work with them on both the buy and the sell side. And I think that's really where everyone should be in this business. I mean, you've got to do it the right way. Otherwise, it's just not going to work. But you see people like NASDAQ is going to be tokenizing stocks.
Yep.
And through that engine, they can actually, they can distribute securities as well that are real estate securities or gold securities, because now they have that platform that's able to push out these digital assets. Well, we're creating this digital content that eventually we think could be listed on the NASDAQ digital exchange under real estate. And there's hundreds of millions of people who are looking at that on a daily basis. So creating this inventory is important for the ecosystem. And I think that's our primary objective, is to create inventory and sell the inventory and be there to manage that inventory for our customers. And it seems like it's building upon itself, which is really healthy for the business. What I'd like to see is more adoption, more institutions saying that they're drawing a line that they want to have X amount of digital assets on their balance sheets, whether it be crypto, real estate, treasury assets. And so we can now start to plan on how we're going to meet their needs and start selling them what they're looking to buy. I think it's going to happen soon, because when they start analyzing the productivity of balance sheets that have digital assets versus balance sheets that have no digital assets, they're going to see the digital ones with digital assets outperforming. If you don't change, you're going to lose. So I think it's just a matter of time, and I'm very patient. We've been working on this for almost 8 years. Very patient, because profits and efficiency always will beat out less profit or losses and inefficiency. It's just a matter of knowledge. And I think, with the president pushing for tokenization, even talking about, some of their sons tokenizing certain real estate projects, once that hits, that opens up the whole United States into realizing tokenization of real estate is what the president is doing, and I want to do as well. Where can I find it? Well, there are a few places you can find it, but RedSwan will be one of those. And I think that all plays into what we're doing in terms of our practice.
Yeah, absolutely. And let's talk a little bit about RedSwan. Where are you guys at right now in regards to what you've tokenized? What kind of size have you guys managed to tokenize so far? And then I really want to get into some of the products you guys offer, like the fund, for example. Where's RedSwan at right now in terms of AUM, as it were?
We've tokenized quite a few assets. Some of them are available on the market. Some of them I have to wait. I mean, if you remember back in 2023,
Yep.
When we tokenized about $2 billion worth of assets on Ethereum. And then we went through some significant, actually that was 2020 on Ethereum. Then we went through some pretty rough challenges with COVID. And even post-COVID, we had interest rates go up almost 400%. So a lot of those assets have to be repriced. What we were looking at before is not marketable today. So we're repricing those assets and we bring them back. But the new assets we're bringing on board, and we just tokenized $500 million worth of
Wow.
hotels and apartment buildings, and had a reveal, which is a launch party in Manhattan last week in New York. So that went very well. So we were able to showcase a portfolio of hotels in very strategic, iconic locations. Like we have a portfolio of hotels that has a hotel in Manhattan, in Lower East Side of Manhattan. We have the Hamptons, both the East and South Hamptons, beautiful hotels. Wow. They're well known there. We have a hotel on the beach of Playa del Carmen, right on the beach. Is a beautiful hotel. Another beach in New Orleans, another hotel in New Orleans, and another beachfront hotel in San Clemente, California. So these are all being delivered as a portfolio, and we're making these hotels. We've gotten the owners to agree to make these hotels crypto centric. So wow. They'll be receiving our payment through crypto, USDT, USDC, even Bitcoin. They will be having events and giving discounts for events, the crypto held events in these hotels. And they're getting branding from the different DLTs. So we think this is a great presence to bring to the Web3 environment, is to have hospitality that they can actually buy into. Because when they buy into that hospitality, they're getting yield off the assets, but they're also getting NFTs that give them benefits, membership benefits. So, for example, the Rivington in Manhattan, there's a line outside the door to get into this restaurant called the Tigre. Always a line outside the door with a big boulder, what do you call it, watchman or guardsman at the door. Show them your NFT, you get right in, right? There's a rooftop that's, popular, lots of beautiful skyline views with a bar on the rooftop. Show them your NFT, you get up to the rooftop, no questions asked. So, show them your NFT, you get, a few nights stay free per year. So these are the things we're trying to weave into our offerings, because we know the audience we're going after appreciates experiences as well as profit, right? You can't live a life of just making money and not going anywhere and not having any kind of fun. So being able to offer these NFTs with these hotels, they're iconic locations that people want to be in on the beach, and gives them VIP access on those properties as well. So we're trying to do more of that, but also the apartment buildings that we're brought out are great locations, good money makers, strong yield. And these are properties that most individuals would not have access to. It's the kind of property that BlackRock or Tishman Speyer will gobble up in a second and put in their portfolio, because they can write that $70 million check or $30 million check to buy it. But now smaller investors can buy into that and own a share of it and get the same pro rata profit as the bigger person who put in $10 million. So I think that I wish I had this opportunity when I was younger, because I would have jumped on it and bought as much as I can with what I have and just continued to build and build and build. And I think you're going to find many of the youngsters in the next gen looking to do just that.
I think that's really interesting. There's this whole kind of undiscovered, and it sounds like you've discovered it, absolutely, side of crypto in regards to some of the benefits you can give people through tokenization, like issuing them rewards. We speak to actually big companies. Some of them leverage the likes of Hedera that actually are really focused on things like coupons and things like this. I know it's very different or somewhat different, but there's a lot of benefits that can be derived from that. And one other benefit I was also going to add was bragging rights. I think it'd be amazing to rock up with my girlfriend to a hotel and we've been able to skip the queue. And not only have we been able to do that, I can say I actually own a piece of this building. I think bragging rights are also a big benefit as well, certainly for somebody like myself. I know there was talks about a fund. So there's a lot of people out there that might not know the property game. You know, you mentioned a couple of properties there. They might not know the area. They might not know what it attracts, what the kind of history of it is. You know, is there a way that Red Swan offer a way for people to gain access to property without actually knowing that much about it? Obviously, and one part that you guys do is education. Of course, you always educate people about what they're getting. But is there a way that people can be a little bit more generic without having maybe an insider scoop?
Yeah, actually, every listing we take, we think about how we can put this listing into a fund. Yep. Because we realize that there are some investors who want directly to invest in what they want only, so a singular asset. But most of the investors are not sure what they want, but they want real estate to say their own real estate and they want lower risk with the real estate. So, of course, when you diversify, you're providing yourself with the lower risk environment because you have more options on success and fewer options on failure. So taking any asset that we tokenize, what we do is try to take a percentage of that asset and put it into a fund. So this, like I just mentioned, these 6 hotels, we've taken 40% of the equity of those hotels that we've tokenized and put it into the portfolio of properties, because now we can make it available for U.S. citizens who are accredited to buy in with a minimum of, say, $10,000 entry. But overseas, where we don't have that accreditation issue, we can lower the price point to $1,000 and let them now be able to have access to 6 prize hotels at $1,000. And if they are able to hit a certain level, I think the first threshold is 25,000, they actually get NFT that gives them that VIP access. Wow. And the more they do, the more NFTs they get. So we're trying to make it so that every asset that we have is somehow put into a fund, so that any investor who just wants exposure to real estate and a good yield doesn't have to give it a lot of thought. They can do all their due diligence. We can give them as much advice as they need, but it is a low risk type environment because you diversified into many locations, and also you have decent yield from each asset which are performing. So the chances on all 5 or 10 assets to all of a sudden have a major disruption, that would be catastrophic for the entire country, right? So this is a way that allows you to enter an asset and feel comfortable that you're not going to lose much money, but you have a better chance on making money. Of course, you can't guarantee anything, but I've been in real estate for 25 years, and I haven't lost anything on real estate. I've only gained. My position's always increasing in terms of asset value and cash flow. And I believe the same methodologies we're going to use for all the assets that we look at, so our investors will come in and have that same kind of benefit.
And if you think about like I own a number of rental properties, not only do I not get, obviously I get revenue, not only are they sometimes a nightmare to manage, this seems to be sort of streamlining the process quite a lot. You know, I've got a number of properties, and I get phone calls perhaps once or twice a month, somebody complaining about something, or something's gone wrong, or whatever it may be. And I know friends that have sort of commercial properties that they let out, and they don't even get those kind of benefits. So it really is cool what's going on, and kind of unlocking a side to this market that isn't just democratizing it, but actually changing it in more ways than one. Now, me and you have had a number of interviews, and we spoke about our kind of shared interest in Hedera Hashgraph. We think it's an amazing distributed ledger technology. It's very fit for purpose. But I know that a couple of weeks ago you were at the Stellar Meridian conference, and you've been at a couple of those. As a big fan of Stellar Lumens, could you maybe give us a little bit of a sort of lowdown on your relationship with Stellar and why it is you're utilizing them to do tokenization?
Well, I like Stellar. I think the whole management team led by Danielle is
Yep.
awesome. I think they're focused on RWA and payments and speed of payments. Micropayments is very good, and it works well for the business we're in. But same with Hedera. I mean, we started with Hedera because they have the
Yep.
same focus. Dr. Lehman and Manson also had this kind of focus on RWA and how tokenization is going to be the next big generator for them. And so that's how we started. We started working with them because we had the same mindset. When Stellar came in and showed us they had the same mindset, we thought, wow, this is a great opportunity to build on interoperability between the two blockchains. So now we've created a source where we can process on both chains seamlessly through RedSwan, which is really creating that interoperability between Hedera and Stellar, and gives us a broader reach in the digital ledger technology space, right? So now we're catering to their customers at Stellar and also the customers in Hedera, allow them to buy the similar assets with similar coins by trading their currency in for a stable coin and both buying. So I think I don't think anybody else has done interoperability on a digital asset like real estate, where they're working with two different blockchains and working and successfully deploying interoperability. So this was key for us. And now we're going to have our exchange, our ATS, which will also be interoperable for secondary liquidity for these customers as well. So we think that's the best way to do business, is to pick the blockchains that you feel are progressive in the area that you're focusing in and build upon them. Because now, as the consolidation will take place in the blockchain companies, we've got probably 300-400 of them right now. I think you're going to start finding, based on use case, people are going to start to consolidate into ones that are providing a real serious use case for the world. And I believe Stellar and Hedera are definitely providing solid use cases for the world, especially as they focus on payments and RWA. And so that's why we're with them. We want to stay with them. We're not planning on expanding to other blockchains right now. We really want to build up a massive product with them, with inventory. And they're very excited about it. So it's a very good relationship between the three companies.
Fantastic. I do think that's a really important point to mention. Crypto is quite spread out at the moment. There's lots of people claiming lots of things, but with all technologies, you tend to get this kind of narrowing out, and winners get to be drawn. And it's not just going to be a one-chain world. I think that idea is an old one. If you think about all of the things, for example, tokenizing real estate, is that really going to all take place on one chain? There's definitely going to be a more dominant one, but it's a mammoth undertaking, let alone all the other uses and utilities that distributed ledgers bring to the table. So I really like that approach, and certainly Stellar.
We definitely condone to more companies who establish themselves to tokenize real estate, because that helps brand what we're doing, and that helps educate the market. If one company has to educate the entire market about tokenized real estate, that's a huge undertaking for us expense-wise. So to have BlackRock come out and tokenize its real estate, to have other companies come out and say they tokenize real estate, that helps to educate the masses, which helps to perpetuate our activity as well. So we're not greedy. It's a huge market. Let's all get there. Let's all help this society to become democratized on real estate, and that'll be a good thing.
I love that approach, and like you say, I can tell this isn't. There's also really an element of actually wanting to help people through democratizing access to these assets that for sort of richer investors, they've done very well off of them. Now, actually, we're saying to everyday individuals, look, here you are. We facilitated this through this technology. It's truly something great that I think is taking place, and we really support you in your journey. Let's talk about the future, and let's talk about RedSwan and what some of your objectives and plans are. 2025, time seems to be going faster and faster, certainly with all the chaotic things that increasingly happen in the world. 2025 is nearly done with. What are you looking for in 2026? What are some of your objectives, goals, or potential things you have in the pipeline that you may want to share with our audience?
Well, first, we're closing a financing. So we raised capital. We have a lead investor, and we have sidecar investors. So that's good. We'll have capital that we need to really scale up. So I'm
Brilliant.
happy that was able to get done, hopefully be finalized in 2025. But I think the distribution channels, first of all, we beefed up our technology. We have a brand new website. You probably see that when you go to our URL. But we are also increasing the usability so that the customer experience is very easy. We're bringing in AI, so when you come to our website, you'll see an AI agent will greet you, and they're the ones that are going to do the customer suitability to ask you the certain questions. So we put that in your profile, but that AI agent holds on to and is all incorporated into our ecosystem. So it's not where people can get access to it, but the AI agent holds on to that information. So the next time you visit, it knows what you're looking for, and it will now recommend to you what's new on our platform. So AI, we think, is very helpful for building, customers and holding on to customers with retention, just because it's meeting them where they are and giving them the education they're looking for. The other hand is making sure that the tools that we're using, for example, right now we have a bulletin board ATS, which is for low volume. You want to sell something, you tell us how much you want to sell. We post on the bulletin board. People who are shopping for deals will look what you're asking for, make a counter offer, and you can have a sale for liquidity on the bulletin board. Eventually, the fully automated ATS will be able to be compatible with NASDAQ, compatible with the London Stock Exchange. AI built will be our final product. I think that's going to come out in 2026. And then looking at the distribution channels, because volume is going to come. We need to make sure we're connected to the volume. So what I mean by that is, hey, this year we're hired 2 senior real estate professionals out of the real estate industry who are not necessarily leaving the industry, but they're coming to join us, getting licensed to sell shares of real estate where they've been selling billions of dollars of whole real estate to buyer and seller over the past 30 years in their career. Now are excited about selling tokenized real estate in a fractional base to family offices and the same institutions. So that's a distribution channel. We're looking at IRAs that are now communicating with their customers on new types of projects to buy. They were once considered to be alternative investments, but now these are alternative investments with a twist because they're blockchain related and they have liquidity to it. So the same person who used to buy real estate LPs projects of developing apartments can buy that same type of property on a blockchain that now gives them the ability to have liquidity whenever they want to sell it. So we have RAs now explaining this to their customers so they can make a choice between what they want. We have investors, or I should say property owners, that are tokenizing, and they're doing 2 things. They're saying, look, we're not sure if we want to go all in on tokenization, but we'll take our offering, let's call it a $100 million offering, and we'll bifurcate. We'll put 40% of that, $40 million towards tokenization. We'll call that, Class B shares, and then we'll have the traditional 60% will be the Class A shares. So they're trying to make sure they extend their opportunity to the younger generation who's looking towards digital versus the traditional generation that doesn't understand it and doesn't want to understand it. I think that's a positive step in the right direction. So there's different types of distribution channels that we are focused on because we think the volume is going to come in and we don't want to miss out on it. So we're going to work with people, compensating them to help us deliver that volume. So that's a big part of 2026 because I really think that, the momentum is going to increase even faster. People from overseas are already calling saying, hey, they want to look at assets being tokenized. The yields in Japan are still fairly low to the consumers. So if they can buy a higher yield in the United States for 7, 8, 9%, and then sell it to the Japanese public, hey, that's a good arbitrage situation, but it's also a win-win for the B2B and the B2C process. So I think 2026 is going to be a really pivotal year for growth for us. And I know I might say that every other year, but it seems very, very clear this time around that the momentum is in our sales. And, I don't have to do too much like I did before. Things are coming in. All I have to do is make this good decisions to work with this company or that property owner or this distributing partner. That's a lot better than making phone calls begging people like we did over the past 4 or 5 years.
Yeah, I think, like I say, this is the 3rd time having you on. It's very interesting. The first time we had you on, there was, I mean, yes, I think for people that understood the technology and understood where it was going, it seemed obvious that this transition was going to happen. Now it's mainstream. People are saying, look, not only is this going to happen, it's happening. And you've got the president of the United States also talking about it, and his son's doing various things in it, like you mentioned, and the likes of BlackRock and everybody. And it's really great to see. It's why we love interviewing people like yourself, people who are kind of thought leaders in regards to the domains in which they operate and understand how technologies can impact them and get ahead of it. And I think, Red Swan really has done that. We're going to leave links in the description to where you can find everything about Red Swan, where you could find Ed on social media, some of his other interviews and presentations. Guys, talking about DCAing, there's new ways of doing it. There's new assets to do it with. And it's certainly something that we're going to be looking into and have been looking into and utilizing, because there's major unlocks coming, not just in regards to younger generations, but also in regards to assets, asset classes, tokenization, and getting stuck in. Ed, is there anywhere you want to send people? Anybody that's interested? Obviously, there's links to the website.
Absolutely. I think going to our website is a central hub. So it's redswan.io. That way you can sign up as being accredited investor from U.S. or a Reg S investor from international. And then you'll see the opportunities we have. But you'll continue to get opportunity updates on new listings that come to our platform. And I think that's really important. I just want, people who are on the retail side and even on the institutional side to stick your toe in. Try this, because you're not going to learn by just talking to people. You have to just try. I mean, to make an investment for $500, hopefully everybody can afford that in the United States to try, because once you do it and you see that it's stable and you see this actually bringing you upside, you're going to buy more and you're going to buy more. And I think all of a sudden you become an investor in real estate and you understand why you're an investor in real estate. And if you don't ever try, you're not going to get there. So I'm just encouraging people to just, stick a toe in and check it out, because I don't think you'll be disappointed. These are beautiful assets, have been well curated to make sure that any of the suspect stuff, any of the stuff that's with people who are not, seriously experienced in the business, we don't bring to the panel. Only people who've had a long tail of success in real estate and have a lot of assets, over $500 million or more assets under management, are the ones we're focusing on, because they know what they're doing. They've been doing it for a long time. Many of them will come on this show and tell you, we've never had a loss, right? And that's true. They say they never had a loss. Real estate, it's hard to lose money in real estate if you know what you're doing, right?
Yep.
It's easy to lose money in stocks if you don't know what you're doing, but it's hard to lose money in real estate. If you buy a piece of real estate in a central business district and the occupancy is at 90%, well, those leases are usually locked in for 5 years. So at least 5 years are going to have that same occupancy, that same consistency of revenue, which is, I don't think people understand that, right? And so I think they think some things are risky, that everything's like the stock market, everything's like the crypto market, but real estate is a different animal in itself, and it builds wealth, it hedges against inflation, and it provides income. And so if you can build up enough passive income, you now have a full-time job just managing your passive income, which I think gives you a lot of opportunity to enjoy your life and do things you wanted to do, whether it be buy a house. People can't buy a house right now. They're too expensive. But if you bought into $2 million worth of real estate that's paying you, 10% yield, you could afford to buy a house pretty easily. You can buy it all cash if you wanted to. So I think there's stepping stones involved in education for real estate. And I'm just encouraging people to stick their toe in and start that process, because they'd probably be very pleased with the outcome over time.
Yeah, the water is warm, guys. It's also very important to think about the world that we're moving towards, and how machines, AI, the kind of digital age may really increase the need for the likes of passive income. And I think this is something I certainly spend a lot of time thinking about. But Edmin, you could talk all day. It really has been a pleasure. Once again, guys, do go and check out Red Swan. Check out what they're offering. It's really cool to have you back on, Ed, and it's always an absolute pleasure. So the last thing for me to do is say thank you very much on behalf of myself and my audience. It's really a pleasure to see you again.
Thank you, Rupa. Same here. And anytime, please invite me so we can stay in touch.